IBM wasn't the only Dow component to report. Goldman Sachs surprised investors with a rare earnings miss. Johnson Johnson also disappointed, while UnitedHealthcare reported an upbeat quarter. But the results pressured the broader market. The Dow Jones Industrial Average fell 113 points to 20,523. The Nasdaq lost 7, and the S&P 500 was off 6. And of those three Dow earnings, the rise in UnitedHealthcare was not enough to offset the losses in Johnson Johnson and Goldman Sachs. Goldman's big stumbling block? Trading revenues, down almost 2.5% from a year earlier. The main culprits? Equities, down 6%, and fixed income, flat. Trading was a bright spot, however, for other big banks. J.P. Morgan Chase and Citibank both posted double-digit increases last week, and Bank of America, reporting today, did even better. Still, at least one analyst believes it's time to pick individual stocks rather than investing in the entire financial sector, which did get a boost following November's election.
We're pretty neutral across this space. We thought that expectations about policy, whether it was rate policy or fiscal stimulus or regulatory policy, had just gotten too constructive, and we've been much more focused on single names where we think there's some earnings opportunity for positive revision, rather than the space as a whole, which we think may be sideways until there's evidence of stronger macro conditions.
Johnson Johnson also disappointed, despite improvements from its year-earlier numbers. U.S. sales of its blood thinner, Xarelto, and the diabetes drug, Invokana, were lower than expected. Globally, sales of its consumer health products slowed. Still, J&J is raising its guidance, hoping to restock its drug pipeline with its biggest acquisition ever, a $30 billion deal for European biotech Actelion, expected to close in Q2. UnitedHealth Group put up better than expected revenue and profit numbers, citing its pullback from the Affordable Care Act exchanges and its growing Medicare business. Revenues rose almost 10%, or nearly $49 billion. The nation's largest healthcare insurer continues to call for a repeal of the ACA health insurer tax, already on hold for 2017, and greater freedom for insurers to tie premiums to the likely health costs of its customers, a touchy subject because older, less healthy customers don't feel they should be charged higher rates.